Thanks to the Federal Reserve, everybody has so much debt that we can't afford to pay an interest rate high enough to fight inflation. But it is going to be high enough to cause a massive recession and another financial crisis that's worse than the one we had in 2008. American capitalism broke down a long time ago, and the latest bailout effort is just another nail in that coffin.
As we start to sort through the fallout of the failure of Silicon Valley Bank and Signature Bank and the government's reaction to it, the next question is, what's next? Government officials and mainstream pundits insist everything is fine now. They say quick government action averted a crisis. But in a recent interview, Peter Schiff said this is really just the beginning of the next financial crisis. Peter David Schiff, also nicknamed Dr. Doom, is an American stockbroker, financial commentator, and radio personality. He is the CEO and chief global strategist of Euro-Pacific Capital Incorporation. According to Peter, this is no longer the 2008 financial crisis. This is the 2023 crisis. It's been a long time, 15 years since we had a financial crisis. I'm surprised it's taken this long for this crisis to begin, but I'm not surprised we are having a crisis. Over the weekend, the Federal Reserve and the U.S. Treasury took quick steps to address the failure of the two big banks. Peter called it the plunge protection team. In order to prevent bank runs and shore up the system, they created a mechanism to ensure nobody loses their deposits, even those that weren't insured by the FDIC. They also set up a loan program that effectively bails out any other banks that might be on shaky ground. While these actions only kick the can down the road, Peter said the situation would have been much worse had the government not announced this bailout. We would have almost certainly had more bank failures. Of course, government officials, including President Biden, insist this isn't a bailout. Nobody wants to admit it's a bailout because obviously the bailouts were not popular, and so they want to distance themselves from that language. But this absolutely isn't bailout, he said. Larry Summers, in a different interview, objected that the collapse was not a result of interest rates, but it was as a rule of failure of management. Peter Schiff responded, stating that both factors were responsible, but interest rate played a more defining role. Let us now get into the video as Peter Schiff breaks down the effect of the collapse and why a financial crisis is unavoidable at the moment. As you watch the video, make sure to give us a like, subscribe, and drop your comments.
Well, the reason that we are now having another financial crisis, and it would already be a lot worse if we hadn't made the mistake of backstopping all these insolvent banks, but the reason they got insolvent was because of the government. The Federal Reserve kept interest rates at zero for 12 years, quantitative easing, and during that time, banks and pretty much everybody else loaded up on low-yielding debt. But in order to keep interest rates that low, the Federal Reserve had to create massive inflation. They called it quantitative easing, and the adverse consequences really started to show up last year when we had these big elevated increases in the CPI. And so inflation was becoming such a burden on Americans that the Fed was forced into taking action. And so it raised interest rates and pricked the bubble that it inflated. And now all these institutions are insolvent at higher interest rates. We have a bigger debt crisis now than the one we had in 2008, which was also caused by the artificially low interest rates that followed the bursting of the NASDAQ bubble when the Fed kept interest rates at 1%. That inflated the housing bubble, but this time 0% inflated a much bigger bubble, which is why we're now having a much bigger financial crisis. But none of this would have happened had we stayed with a free market. The free market would have purged the economy from all these excesses a long time ago. And instead of having a bubble, we would have had a genuine recovery with real prosperity instead of the phony prosperity that we've enjoyed. And now the chickens have come home to roost.
These problems had much more to do with the failure of risk management at Silicon Valley Bank. I also think that if we didn't operate to contain inflation, we would have even higher interest rates, and those even higher interest rates would make more financial problems, not less.
Well, it's both, but, the low interest rates is what led to all the excessive risk-taking, and so did the moral hazard of the 2008-2009 bailouts. Wall Street learned the lesson that you can gamble, and if you win, you keep the profits. If you lose, the government bails you out. So that was part of the reason for the risk-taking, but also government regulation, banking regulations, encouraged all banks to load up on treasuries and mortgage-backed securities because of the favorable way they're treated for accounting purposes. They don't have to take any haircuts. They don't have to mark them to market. And so it's government policy that caused all this. But none of it would have happened had we not had the 0% interest rates or the quantitative easing. And inflation, unfortunately, is about to go through the roof, because when President Biden said that nobody is going to have to pay for these bailouts, he's wrong. We're all going to pay through inflation, because the Federal Reserve is financing it by printing money. And so the price of everything is going to go up.
Yeah.
And in fact, bank deposits are more at risk now than ever before, because inflation is going to destroy the value of everybody's savings.
Government officials can plausibly claim they are not bailing out the failed banks because they are letting the institutions go under. But the bank's customers are getting bailed out. They would have lost money, but now they're not going to lose money. Why? Because the government is going to make up for its losses. Biden and others also swear taxpayers aren't on the hook for any of this. Okay, well, then where's the money going to come from? The man on the moon. Of course the taxpayers are going to pay, but they may not pay in the form of taxes because nobody has the integrity to raise middle-class taxes. But that doesn't mean the taxpayers are going to get away with this. They're going to pay for it. It's just that they're not going to pay for it with higher taxes. They're going to pay for it with higher prices, Peter commented, referring to the inflation tax. On Sunday, the Fed announced the Bank Term Funding Program, BTFP. This program will offer loans of up to 1 year in length to banks, savings associations, credit unions, and other eligible depository institutions pledging U.S. Treasuries, agency debt, and mortgage-backed securities, and other qualifying assets as collateral. Banks will be able to borrow against their assets at par, face value. In effect, the plan creates a mechanism for banks to acquire the capital they couldn't otherwise access under normal market conditions. And of course, the Fed will create the money for these loans out of thin air. According to Peter, we are now officially in QE5, and he expects the Fed's balance sheet to go up from here. Peter said it's amazing that just a week ago, people were still talking about the Fed slaying inflation while bringing the economy to a soft landing. Meanwhile, he said the only way the Fed could succeed in getting inflation anywhere near 2% is by creating not just a recession, but a financial crisis. Peter Schiff is known for his doomsday predictions on the U.S. economy. He predicted the housing market collapse and the ensuing deep recession we experienced from 2007 to 2009. He also predicted that we would see a financial crisis this year. What do you think of Schiff's doomsday prediction? Will this be the year everything burns? Let us know your thoughts in the comment section below. Also remember to give us a like, subscribe, and turn on post notifications. Thanks for watching.